The first time I opened up BigShort, I felt like I was thrown in the cockpit of a fighter jet. Like, yes, I could tell that this is powerful, but how do I actually use it to make money? And that is a question I'm going to answer in this video. Because no matter what kind of trader you are, whether you're a hyper scalper, a regular scalper, or a swing trader, BigShort can help you make more money with better entries, better exits, and better stock selection. And by the end of this video, you'll be able to look at a chart like this, or a chart like this, and recognize potential entries or exits for a higher probability trade. But to get there, we'll have to go through the 4 steps to mastering BigShort, because learning BigShort and using BigShort is a skill. And step 1 of that skill is understanding what the heck these indicators even are. You have to be able to look at this chart and recognize, oh, this is MomoFlow, this is FastFlow, and these are put buys. And you have to do that quickly because when you're trading, the markets can change quickly. Step 2 is understanding how these indicators work and being able to retroactively explain why moves happen by looking at a full days of data, which then leads you into step 3, being able to predict potential moves by looking at historical data bar by bar and predicting what's going to happen next. And then finally, you can hit step 4, which is obviously actively trading with the indicators changing in real time. And for the overachievers, there's also step 5, which is the bonus. If you discover your own strategy or even a new way to use BigShort or a new indicator, then maybe we'll name an indicator after you. True story. Now, I'm not going to go over every single indicator here and every possible way of using BigShort, because then this video would be 10 hours long and you're not going to watch it and it's just going to be too much. Instead, I will go over the foundations you need to understand to be able to trade with BigShort. I'm going to give you some simple setups to use, and then we're going to go into more advanced topics. And then if there are some setups that really interest you, we're going to have separate videos on this YouTube channel for those, so you can go deeper into those if you want. And of course, as you go through this video and after you go through this video, you probably will have questions. So the first thing I want to make sure you do is join the BigShort Discord, which if you're logged into BigShort, all you have to do is go here and then click on Members Discord, and it will automatically link your Discord to the BigShort account, so you get access to our subscriber channel. You don't have to type anything if you don't want to, but the BigShort tutoring channel is the best place to ask questions and see other people asking questions. And we sometimes post chart markups based on how we traded for that day. And the announcements channel is where we post important BigShort updates, so you know what features are new and whether BigShort is down for some reason for maintenance. So if you haven't joined Discord yet, make sure you do so by going here and clicking on Members Discord. Now, before we get into the UI, the indicators, all that fun stuff, there is one question that we have to answer. And that question is, why the heck does BigShort even work, and why should you spend your time learning BigShort? Because yes, BigShort is very powerful, and there are literally hundreds of users who have shared their profits inside of our profits channel. And of course, Tay, the founder of BigShort, turned 139K into 10 million plus using these exact indicators. And you can read a story if you want at the link below in the description. And I know if you're here, you probably feel that there's something different with BigShort, but you may not be able to verbalize exactly what that is. So let's get into it. There are 3 key things that give you an advantage when you're using BigShort. The first one is positioning or inventory. Now, you might have used order flow tools before, or you at least know what they are, right? They show you where certain transactions happen and how big those transactions were. And that certainly can be helpful. But what those tools don't show you is who is actually making those transactions, right? Is it mostly retail and dumb money? Is it high frequency trading firms? Is it dealers hedging? Is it smart money? No other tool actually shows you who is actually making these transactions. Instead of telling you like, hey, there was 1 million shares traded on this candle, like regular volume, which yes, we do have regular volume on the platform, BigShort tells you within that volume, within this specific candle, who the participants were and what their positioning was. And this interaction between all of these different participants is what allows BigShort traders to see, hey, this breakout might be fake, or hey, it looks like dealers might be trying to push the price down. Second is dealer hedging and inventory pressure. Now, there are more and more different GEX platforms popping up left and right, because a lot of them can just use the Unusual Whales API, which a lot of them do. But BigShort pulls our data live and processes all of that data ourselves. So you can actually get live GEX data all throughout the day. Plus, BigShort also looks at dealer hedging not just in options, but also in comments. Most platforms only show the option side, completely ignoring the hedging that actually happens in comments. So that means that BigShort isn't just showing you gamma stuff like calls walls, put walls, gravity, gamma flip, MVC, etc. And we actually do have our own flavor of MVC that seems to be more predictive, but it actually shows you how much pressure the dealers are under right now, what the dealer hedging looks like, and all of those good things that you can't get from any other platform. Plus, if you traded gamma, you know that it changes constantly, and BigShort updates all levels throughout the day live for every single ticker in the NYSE and NASDAQ. And third, manipulation. I mean, we've all had this happen to us, right? Like you're in a trade, looks like the perfect breakout, you enter, you put a stop somewhere, and then your stop gets perfectly swept, and then it goes in the direction that you were thinking it would go. Now, this wasn't necessarily personal, of course, but BigShort does already see some of this manipulation and whether a move is likely to be real or is just someone pushing price around. So now let me show you where you can actually see all of this. When you first join, you pretty much want to focus on three things. First, every day in this menu, you want to check the squeeze meter to see if the next day is going to be a honey badger day. Honey badger is a proprietary BigShort signal, and many traders make enough money in just one honey badger day to pay for the entire yearly subscription to BigShort. So we generally recommend trading every honey badger day that happens. I'm going to show you how to trade honey badger days in a later section. Next, you want to check the seasonality tab to get an idea of the historical SPY performance for the specific date. This is based on 30 years of data. And while this is a weaker force in the market, it's still good to have a little bias and a little understanding of what the seasonality tends to be. And finally, we have our main chart, which is where you'll be spending most of your time. So let's get into this main chart. First, you can click on this logo right here to make this menu smaller. And keep in mind that when you join your chart in the indicators here, it might look a little bit different, but the basic idea stays the same. Right here at the top, you obviously have the price pane. Right here, you can select which ticker you want to view. Right here, you can go back and choose what date you want to view it on. And you can also choose between 5-minute, 1 hour, and 1 day charts. Very simple. You can also use the arrow keys on your keyboard to go between days. So this is me going backwards, and then this is me going forwards to 7:31. Now, all of the panes under the price pane right here are all of our indicators, and they can be turned on and off by going into settings and selecting or deselecting indicators. What I want to do actually is I want to separate FastFlow and MomoFlow into two separate panes. And what happens is these indicators get added in the order that you select them in. So I personally like having FastFlow and MomoFlow in separate panes just because I find it easier to process. So I'm going to select FastFlow. I'm going to select MomoFlow. As you can see, they appear at the bottom here in that order. But of course, we have all of these indicators here on top, and maybe I want these to be on top. So what do? All I have to do is just unselect all of these other indicators that are popping up, right? So I'm removing them from above. And then I want to add the indicators that we are going to use today, right? So I'm going to add net options flow. I'm going to add skew. Now, if the indicators look a little bit too small, you can hover over this line in the price pane and make the price pane a little bit smaller to make the indicators bigger, or vice versa. If you really just want to look at price for whatever reason, you can also make the price pane a lot bigger. I generally have it a little bit smaller because I like being able to look at these indicators. And the same applies to this menu on the right. You can also drag this to the left and right to expand it. Now, there are quite a few things here in the menu and here as well, so I'm just going to run through these really quickly. This, if you click on this, this allows you to draw lines on the chart. As long as this is selected, you can deselect it and now you can operate normally, and this deletes it. And then this here, if you don't know what it is, or if anything is in the BigShort menu, all you have to do is hover over it and it will tell you what it is. This is the percentile threshold lines. And the reason we have this is if we're at the beginning of the day, so let's go to the very beginning of the day, right? These bars resize based on the bars of this day. So at the beginning of the day, it might look like these bars are really big, but historically they might be kind of small. So these percentile bars, if you click on this, this will show you the top 10 percentile lines, top and bottom, for all of these indicators. And if you want to only have this shown for certain ones, for example, I see that FastFlow, you don't have to know what that is, I'll explain that later. FastFlow doesn't have the percentile bar, so I will right click on this and check FastFlow to add the percentile bar for FastFlow. This right here is the opening range shader. So if you left click on that, it turns on and off the shade. If you right click on that, you can select different opening ranges to be shaded. And you also get a little sound alert if you have the alerts on when a stock that you have open does break out or down of the opening range. Finally, we have this little indicator pane right here. This shows the same data as these little numbers on the left. What I like about this is right here in this indicator tab, you can, number one, move it around, but number two, these actually flash green and red depending on where each indicator is going. So for example, if FastFlow here, you don't have to know what that is yet. If this was going down, right, more selling, then this would be flashing red, and vice versa. If it was going up, this would be flashing green, which can be helpful if you're, trying to scalp really quickly or just want to, at a glance, know the directional value of each indicator. This button right here, it expands the price pane to fit every single indicator. And then you can click on it to expand it less. And then this button constrains the chart only to regular trading hours. Now, be careful with this one, because if you have this on at the beginning of the day, you might think your chart is broken because it's not going to show anything pre-market. So in that case, just uncheck this and you're going to see the whole day. And then finally, this button right here hides this pane on the right, where we have a lot of fancy stuff like gamma, charm by strike, some fundamentals, the actual options flow if you're used to seeing it like this. And of course, we have the BigShort chat right here if you want to use that as well. But generally, you just want to open the Discord and chat there if you're going to do it, because In Discord, there are a lot of very, very useful callouts that do happen. Of course, that is great and all, but what the heck are these indicators? So glad you asked. Let's get into it. One important thing to keep in mind is to look at the indicators in order of importance list inside of our help center. This is going to be inside of Getting Started with BigShort New Users Guide. And you can see that price action right now is at the very top. So all of this should be confirmed by price action. You'll also see that there's a lot of indicators here. We're not going to go through all of them because some of them are for professionals and only for specific situations. Some of them are elite only indicators. And keep in mind, this list might actually change when you're watching this. So for the most updated version of this list, go to our help center and you can find that there. Link is going to be in the description as always. And another reason I'm not going to go over all of these indicators because number one, it's a lot. And number two, like you can think of it almost as like the first time you're visiting Chuck E. Cheese. Like all of these games or all of these indicators, they work, they're super fun, and you may not know how to play all of them just yet. But you also don't need to play all of the games. You can find some of the games you really like, just keep playing those and then add more games or more indicators to your tool belt as you go on. Basically, I don't want you to be overwhelmed by this long list because you don't have to understand every single indicator or really use every single indicator to be successful with BigShort. And the final thing to keep in mind is that all of these indicators and how you trade them depend on you. They can all be traded differently, but it depends on your risk tolerance, depends on your approach to trading, how long you hold trades for, what you're most comfortable with, whether it's, super quick scalping, momentum trades, longer term scalping, or swing trades. I'm going to go over some different variations of how you can use BigShort to trade, but of course, make sure that it's aligned with your trading style or that you're willing to learn this new trading style that you might be interested in. And finally, when you're starting out, do not trade power hour. That is a great way to give back all of your profits that you made in the beginning of the day because power hour can get crazy. A lot of weird things can happen. There can be institutional rebalancing, a whole bunch of other things. So until you're an advanced user, and even then we recommend generally not trading it, but until you're very advanced and you understand how these indicators specifically work during power hour, which can be different from how they work throughout the day, just ignore power hour, just don't trade it. Go take a nap, go on a walk, do something that's going to be more beneficial to your life than your wallet. Now, for most of the indicators I'm going to go over today, there's one simple thing you have to understand, and there are some exceptions. Generally, on each of these panes, down means selling and up means buying. So for example, this is MomoFlow up, so this means it was buying. This is FastFlow down, so that means it was selling. And this right here is purple down, which means that puts were sold. Now, what is MomoFlow? What is FastFlow? Really good question. Let's get into it. Momo are these gray bars right here, and you can think of them basically as a proxy for dumb money. This includes both retail investors and also blocky orders from larger investors who can still be considered mostly dumb money. And this red line right here that you can see is just the aggregate Momo tally throughout the day. It just adds up all of the Momo bars, including the current bar, and gives you that line. So as you can see here is Momo is up, this is up, and then we start selling here, and this line starts coming down. Pretty simple. Now, instead of me just telling you here's how Momo works, let's take a look at an example and see if you can figure out, because that's usually the best way to use BigShort. Look at charts, find patterns, and then try to trade based off of those patterns. So right here, we are on SPY on the 5-minute chart. And so what happens? We see that on the first bar, Momo is buying, and we have this really, really big downwards wick. Okay. On the second bar, Momo is selling, and we have this price up. So let's take a look at what happens next, right? Let's expand. On the next bar, Momo is selling. We still get a bar up. Then Momo's not really doing anything. Momo's kind of disappeared, right? If you look at the left here, this is a -1 million bar. So it's still selling, but really a tiny bit. And then right here, Momo goes back to selling more, another big bar up. Now Momo is selling a little bit more. And then if we go here, oh, would you look at that? Now Momo is buying. So far what we had is price moved up when Momo was selling, and then price right here mostly moved down when Momo was buying. So Momo is buying here. Now, what is more likely to happen next if Momo kind of stays in this buying phase? And I want you to actually think about this because this is an important way of figuring out these indicators. Now, if you said it's probably going to go down if Momo keeps buying, you are correct. As you can see here, we get basically this flush right here. As Momo is buying here, price goes down. Then we have a Momo reversal and we get some price up. So based on this example, you can probably tell that on SPY, Momo is generally an inverse indicator because dealers, market makers, all of the other participants make a lot of their money by shaking out Momo out of their hard-earned paychecks. Now, I do have to give 3 caveats because I don't want you to just jump in and immediately trade the reverse of every single Momo bar. That's not quite how that works because BigShort indicators, they do show you a lot, but they're not, green means buy, red means sell indicators by any means because those don't exist. And anyone who tells you that they have a purely green means buy, red means sell indicator, they are probably just lying to you and trying to take your hard-earned money. Number one, this mostly applies to SPY. Momo being inverse is mostly a SPY thing. Other tickers behave a little bit differently. Some tickers are more Momo driven because market makers just take a step back and let Momo do its thing. And sometimes on SPY, for example, we have a thing called Momo Mondays, where Momo, at least in the beginning of the day, is the dominating force because market makers don't know the retail position, so they kind of just take a step back and let Momo drive the train until they figure out what retail positioning is. And number three, for all of these indicators, the goal is to look for a confluence and not just trade off of just one indicator like Momo. Now, the next pane right here is net options flow. And for this one, you have to understand a couple of things. Number one, P purple is for puts. P purple puts. So right here, we have P purple puts. That is going up, which means that what? Puts were bought. And then calls are blue. So right here we have blue calls down, which means that calls were sold. You can also see that there are bars and then there are these little things, hills in the background. The bars are unusual net options flow, which usually means that it's a sweep or a block, which means they just wanted to make an aggressive fast transaction that's usually large in size, and the hills are just all option flow. And if you want to take a look at these separately, you can always go into settings and then enable just net unusual premium, and you'll see right here, let me make this a little bit smaller, that these bars now show up both right here and right here. If you want to turn the bars off here, you can go here and turn off the unusual net option flow bars. I usually just keep them in the same pane because it's just easier for me. Now, one thing to keep in mind is that unusual net options flow here is measured in dollar terms to try to make it easier for you to compare it to other indicators and also just to look at it in reality, because other platforms that measure options in terms of just contracts, well, 1,000 contracts at 10 cents premium versus 1,000 contracts at like $10 premium are very, very different. And generally for options, buying calls or buying puts is more bullish or more bearish than selling calls or selling puts. Now, if you look at this chart, you'll also notice these golden and gray lines and then also a bronze line right here. These are golden sweeps, gray sweeps, and bronze sweeps. And golden sweeps are transactions that are system marked as bullish. Bronze sweeps are transactions that are system flagged as bearish. And these gray ones are just more neutral transactions. Now, these aren't very high at the top of the indicator list, but I know you're going to ask about them, so I'm telling you what they are right here. Now, for net options flow, I want to go over two more things on this chart. And generally, what you want to look for, what is the most bullish, is going to be having something like this, except having these bars be a little bit bigger, where calls are bought and puts are sold, right? We have this hill up here with calls and this hill down here with puts, and vice versa. What is going to be generally more bearish is puts bought and then calls sold. And the other interesting thing on this chart is right here, we have a pretty big net options flow, a lot of calls bought, and that actually marked the bottom of the day. And then right here, we have a lot of calls sold, which if we extend a line from here to here, I believe that's even. There was some bearishness after that. Now, historically, these aren't mega huge. As you can see, I turned down the percentiles, but they were big enough to have an effect. And for y'all swing traders, you can actually use the 1 hour and the 1 day chart to find stocks that might make a move with large NOF. So one of our traders in our community actually called out this double big put sale right here, after which Iron went up, another big put sale, after which it went more up. And right here, there were a lot of puts bought, which eventually led to a down move. And you can also look at the same thing on the daily. So for AUR here, we had a pretty large block of calls being bought, which eventually led to an up move. And we also had these puts sold, so more up. And then right here, we had a big amount of puts bought, which led to a little bit of a down move here. We're going to see what happens later on here. But some of our traders do literally pretty much just trade only off of the hourly and daily chart because they prefer to swing trade or just don't have a lot of time to dedicate to trading intraday. And I'll go over some more swing trading strategies later in this video. Next up, we have dark pools, which are these little gray circles right here. If you hover over them, you can see the size of each dark pool. Dark pools are basically private trading venues where large institutional transactions take place and they are anonymous. And keep in mind, each dark pool has both a buyer and a seller. So it is a complete transaction. But even though it is a complete transaction, what we found is that dark pools generally tend to work as support or resistance, especially if number one, they are larger. Number two, there is a lot of them. And number three, usually the farther away from price they are, the more of an effect they seem to have. And if a dark pool shows inside of the candle, you can just ignore those. So if we look at SPY here, we had a peppering of dark pools here. So that kind of functioned as a bit of a resistance level. And then we started getting more dark pools around here. So another nice bounce, another dark pool, and another peppering of dark pools. As you can see, it kind of went down. It basically ate this dark pool level for a little bit, another dark pool, then it bounced up right here with another dark pool right below. And then finally, as we get into power hour, it eventually just ate the dark pools and said, you know what, whatever, dark pools don't matter. It's power hour now. Nothing matters in power hour. Don't trade power hour. This is another example on SPY when we get a whole peppering of dark pools right here and we do end up eventually going up. Then we get another peppering of dark pools and we eventually end up going up. And then this is power hour. So dark pools could give or take, but we do end up eventually going up a little bit more. And then this day here, as you can see, there was a dark pool here and we had a whole peppering of dark pools here. But this day is unique because this was FOMC. So these dark pools, as Worsh kept talking, they got eaten. Eventually price did get pushed down below them, but it is FOMC, so anything really could happen. And we did get a peppering of dark pools right here as well. Next up, we have MVC, or the most valuable contract, which are these yellow diamonds on the chart. Now, this is a gamma concept, so I'll go over it a little bit deeper in the next video where all of the gamma stuff will live. But generally, you can think of MVC as number one, a potential magnet, and number two, if price does reach it, as potential support. So as you can see here, as we opened up, the MVC moved up to here. So price kind of got drawn to it, but then it was like, nah, we're probably going to go down. We got some dark pool support. MVC stayed up here, so we eventually did hit MVC. And then right here, as MVC moved up and we had this dark pool confluence, we eventually also almost hit this MVC and then eventually hit it in power hour. Then on 7:31 on SPY, as you can see, we opened up, but then MVC stayed down. So we hit MVC, MVC moved down. We hit MVC, had a potential breakdown, but then it bounced up, hit MVC again. Right here was kind of deciding where it wanted to go. Finally, the MVC was found, and then once again, MVC flipped, so we hit it here, and then MVC eventually flipped here as well. And as you can see right here, basically acted both as support and a bit of a magnet right down here. Now, I'm sure you've noticed these green and red lines on the chart, so I'm going to explain these. These lines right here are the call and the put walls, and that's another gamma concept I'm going to explain in a separate video. But a simple way of using them is by looking when they move up or down. So the green is the call wall, and red is the put wall. And an easy way of looking at it is if the call wall moves up, moves up, moves up, that is bullish. If the call wall moves down, that is bearish. And then if the put wall moves down, that is generally bullish. And if the put wall moves up, that is generally bearish. And if we are ever in a situation like right here where they are crossed, basically no signal, you can ignore these completely. Now, it's not always as clear cut as this, and once again, use multiple confluences, but on this day, you can see that, okay, right here, we have the call wall move down, which is bearish. We have the call wall right here, the put wall moved down and up pretty quickly, so not sure. Right here, call wall moves up, once again, more bullishness, call wall moves up, more bullishness. And right here, the close, the call wall moved down, which was a bearish candle. And finally, this last pane right here is FastFlow. FastFlow is basically just really fast, automated algorithmic trading activity, which includes HFTs, automated rebalancing strategies, and other algorithmic trading. Now, don't try to front run FastFlow because FastFlow is really, really fast, faster than Barry Allen. And we generally don't recommend beginners and new traders to focus on FastFlow because number one, there are different interactions with how it interacts with other indicators. Number two, it's complex. And number three, you have other indicators, but I know you're going to be curious about it. We do have it on our charts, so that is what FastFlow is. As you can see, FastFlow also has some unique coloring, right? We got dark green, light green, pink, and dark red. So what do those mean? Well, pink and dark red just means that FastFlow is selling. FastFlow is pink if it's aligned in the direction of Momo. So pink means that FastFlow is selling and Momo is selling. FastFlow is red when FastFlow is selling, but Momo is buying. And then for green, FastFlow is dark green. That was a horrible drawing. FastFlow is dark green when Momo is selling, and it is lime when Momo is buying. So FastFlow coloring just depends on the direction of Momo for that same bar. And of course, this green line here for FastFlow is a FastFlow tally, which is just the aggregate of all of the candles up to that point. And on net options flow, this golden line is just the net options flow tally, which is also just an aggregate of all of the net option flows throughout the day up to that point. Okay, I know that might have seemed like a lot, and honestly, it is a lot. And at the beginning, it's going to take you some time to even just be able to recognize, okay, what the heck are these indicators? Okay, Purple, we got purple here. What does purple mean? Purple means puts. It's down. What does down mean? Down means sell, so that those are sold puts, right? This is Momo, it's up. This is FastFlow, it's down red, which means it's the opposite direction of Momo. It's gonna take some time to get used to that. But if you get overwhelmed, you can always go back to this video or go back to our help center for a quick primer on what these indicators are, how they work. And you can even have the quick start guide pulled up on another screen while you trade for the first week or so, just so you get used to the indicators. Okay, I don't think you need this test, but we're gonna do it anyway. So what does this mean, right? Just take a second. What does this mean? Well, it's purple, and purple is puts, and it's up. So it's up, so that means it was bought. So these were bought puts, right? And it's also a bar, which means it was unusual net options flow. So these are unusual puts that were bought. What does this bar mean? Now this is gray, so it has to be Momo. It's up, so it's bought. Pretty simple. And finally, what does this mean? This is a little bit more complicated, but I'm sure you can recognize it. This bar right here is Momo, so Momo is down, which means it's selling. And then this bar right here is FastFlow because it's number one, dark green, and it is buying while Momo is selling. So that is most of the indicators we're going to focus on in this video. I'll go over all the gamma stuff a little bit later, which is going to be in the next video. For now, let's take a look at something called UltraFlow. That lives in the UltraFlow chart, and it's only available for indexes because what UltraFlow is an aggregate of all of the tickers inside of the index and all of that data from those tickers. So for example, we still have FastFlow, MomoFlow, and net options flow, but this Momo and this net option flow, that is not from SPY itself. That is from all the underlying tickers inside of SPY put on this chart live for you to see. And another reason I wanted to bring up UltraFlow is because right here we have something called SimSearch. Now, it's not going to be very pretty because the day is already done, but the way SimSearch works is you can think of it as basically a price analog. It looks at 30 years of previous SPY price data, and it finds the 5 most similar days to today on SPY up to that point. So right here, it's kind of cheating because we already have a full day of data. So these are the most similar days to 7/31. But the way we usually use it, it's not super high on the list of indicators, but it's something you should be aware of, is not looking for price prediction. So for example, here, it kind of worked out because this is the very end of the day. But generally what you want to look at is you want to look at time. And what I mean by that is to look at inflection points and what is happening when. So let's say we're early in the day and we have no price action to the right of this, right? All of this, none of this exists. All we have is just UltraFlow showing where price went on the previous 5 days that is most similar to today. Now, the SimSearch at this moment in time might have been different, but if it was the same, you would look and see that right around here or here, there seems to be an inflection point where price tends to go up. And that actually is exactly what happens. So when you're looking at SimSearch, don't focus on the end of day price because sometimes you might see SimSearch that looks like this and it would say that the end of day price is 760 or something ridiculous. But look at it for the inflection because in general, humans experience the same kind of circadian cycles. They eat at the same time. They experience the same hormones at the same times throughout the day. So while it's not a perfect predictive indicator, it is something you should be aware of and something that you can take a look as you're trading. And fun fact, you're in good company because Paul Tudor Jones actually used a similar price analog approach when he took his well-known trade in 1987, but he was looking at comparison of 1987 to 1929, and those two crashes had really similar price action, which made him actually take a massive short position and make a whole bunch of money. Okay, I know that was a lot, but congratulations because you've made it to this section on actual big short setups. I'm gonna start with some simpler setups that you can use and then go into more advanced ones throughout this video and in the next video. Now, in general, I recommend not trading or really significantly downsizing the first couple of days because you're gonna have to get used to the indicators, figure out what they are, and just watch price action, paper trade, and see how things work out. Because yes, Big Short is complicated. When I first joined, I watched 10 hours of Taste Q&As, I read all of his messages in Discord, and even then it took me some time to figure it out. And what I realized is I actually went back and watch all of those videos again before creating this onboarding. And what I realized is there's a lot of nuances that I missed the first time I watched. So I'm assuming that's gonna happen with this video as well because there's a lot of information. I know it is a complete fire hose, but you can come back to the help center, you can ask questions in our Big Short tutoring channel, and you can always rewatch this video and replay the parts that might not make sense or you might need a reminder on. So let's actually get into the first example setup. And this probably is one of the simplest setups that you can figure out, but it's very helpful to understand because it helps you understand Momo a little bit more. This is called the first bar Momo scalp. And I'm actually going to show this to you live because it has to be performed live within the first bar of the day, within the first candle on SPY. This is a SPY specific setup. So what happens is on that first bar of the day, you look at Momo direction. This is generally a scalp, and you look at where Momo is going. As if you remember, Momo is generally an inverse indicator. So on most days, we look at where Momo is going, and then we trade against Momo. Right here, Momo went up, and then Momo flipped downwards. So I generally wait about 15 seconds to enter, because sometimes Momo does kind of flip around in the first 15 seconds. Tay doesn't always wait. Sometimes he takes a trade immediately. Sometimes he waits a little bit longer. This depends on the size of the Momo. I have a full video going over this trade on the YouTube channel, so I'm going over this a little bit fast. But generally, we see that Momo flipped down, and we see that price is moving down. So if Momo stays down, what are we looking for? We're going to look for price action to confirm the move. Right here, momentum changed. Momo is down. And so what we do is we take a trade in this direction, right? We take a trend in the bullish direction. So this is an example of potential entry. This is a mental stop loss. Don't use heading and stop losses. Market makers can see them, and that's no good for you or anyone trading with BigShort. And as you can see, Momo stayed down. So for this trade, you can stay in it as long as basically, if the first bar is really extended, you can exit a little bit earlier. If the first bar goes against you, you can just exit immediately at low of day or a little bit below, depending on where low of day is compared to your entry. And in general, so Jeff adjusted his trailing stop or his mental trailing stop, and you can exit in multiple times. You can exit at the close of this candle. You can exit partially at the close of this candle, because sometimes this does lead to massive moves in the direction against Momo of the first bar. So you can have partial exit plus a runner, or you can exit when Momo actually flips within this candle or on the next candle. Now, this is a SPY example on a regular day, right? Momo went down, we took the trade upwards. But if this was a Momo Monday, we would be looking to take a trade in the direction of Momo, which would be going downwards. Now, I personally have I think 72% win rate on this strategy. I don't trade it every single day, but when I do, generally it works. And sometimes I do catch basically a partial exit here and some nice trailing runners that do go on to get a nice additional gain. So this is a very simple strategy, but don't mistake simple for not powerful. Now, you might notice that that example was generally just a one indicator trade, looking mostly just at Momo. Sometimes I do like to look at other indicators as well, as confirmation or disconfirmation. But in general, we recommend looking for directional alignment with as many of these indicators as possible, especially the indicators that are closest to the top of the list, right? In trading, the goal is to increase probabilities, to get the probabilities in your favor. Maybe that's win rate, maybe that's risk to reward, whatever you're focusing on, right? You're focusing on probabilities. We're not focusing on guarantees because those don't exist. So generally, we want to look at a confluence of these indicators, even on the first bar Momo trade. If, for example, I see that Momo is downwards and I want to take, a trade against Momo, but I see really, really large put buying, and then I see MVC that's all the way down here, and I see Darkpools above, I'm probably not going to enter that. That is a lower probability trade. I am not going to enter that. So keep that in mind. I'm just trying to give you a simple trade that you can check out, experiment with, start with, and then we're going to build on top of that. Now, the next setup I want to share with you is the honey badger day trade, which lives inside of the squeeze meter area. Now, generally, the more powerful the honey badger is, the more likely it is to succeed. I'll go with the criteria a little bit later, but even badgerish days and weak honey badger days can be very, very powerful, especially when using confluence with other indicators. Now, this is where the help center is helpful. Generally, honey badger days have about a 90% success rate and happen about 6 to 10 times a year, although some years there's more. And many of our users more than pay for their entire BigShort subscription with just one honey badger day. So you should definitely trade every single honey badger day you see. Now, what is actually the criteria for a honey badger day? Generally, they have 3 patterns that look like this. We have some sort of early morning weakness. So it's either a U shape. We might have a little rally and then weakness, and then it rallies into the afternoon. Or if it's a really powerful honey badger day, or if it's just an uptrend day, we might just see a big, big move up. Obviously, U days like this are the favorite of many big short traders, but you can trade other days as well. And what we're looking for is we're looking for a late day rally where the price goes above either today's open price or yesterday's close price, whichever is lower, within the last 2 hours of trading. Now, in simple terms, the reason honey badger days work is because these happen when there's a lot of shorts that are going to have to cover, and where shorts have to cover, they have to buy, which moves the price up. And the stronger the honey badger day is, the more shorts have to cover. And it's almost like a seesaw. When everyone is on one side of the seesaw, there's nowhere to go but the other side of the seesaw. Now, when we do have a honey badger day, right, and these 3 shapes, So what you're looking for is actually, if it's a U-shaped day, you're looking at other big short indicators to find a potential entry. So let's actually take a look at an example here. Funnily enough, 731, the day I keep showing you, was a badgerish day. So this wasn't a full honey badger day, but as you can see, it has that U shape, right? It went down. We saw, for example, that Momo right here flipped. We saw call walls moving up. We saw MAC moving up. We saw MAC moving up. And either here or right around here with MAC and the column moving up would have been a potential good entry. But in general, when you're trading honey badger days, you do want to confirm with other big short indicators to make sure that you are entering at a time where it makes sense and you're not getting washed like this. 721 was another example of a badgerish day. So we had a little bit of early morning weakness, but then for the rest of the day, we kind of had a rally and we did hit that price within the last 2 hours right here above today's open. Now, there are 3 rules to focus on in addition when trading honey badger days. Number 1, generally you don't want to buy the open unless the open is obviously bullish, because you don't know which honey badger day shape you're going to get. And if you buy at the open and it goes all the way down, you're going to be very, very sad and you're going to curse the badger. Number 2, never ever short the honey badger day. Now, if you're a really experienced user, maybe you can do it, but don't even try it when you're starting out, because you're fighting against a whole bunch of shorts. You're fighting against the badger, and the honey badger tends to win. And number 3, this obviously only applies to SPY. Now, other tickers, they might move with SPY or have relative strength against SPY. So in a way, you can use it to trade other tickers as well, especially in those U-shaped days. If you see a ticker that has relative strength early in the morning, as SPY is going down, and then you know that SPY eventually is going to reverse, you could trade those tickers as well, but generally we just recommend trading SPY because, well, that's what the indicator is for. Another somewhat simple Momo related setup is the NOF Exhaustion setup, which you'll also hear Big Lime or Big Pink mentioned kind of in the same breath sometimes. Now, this explanation might be a little complicated, but it's Ted's explanation that finally made it all click for me. So I'm going to go over it, and I promise I'll explain why there's a whole bunch of Spartans, a random wall, and a gear right here. So let's imagine for a second, right? Just imagination. Imagine that there are 300 Spartans, maybe even more, pushing against this wall with a gear behind it. Now, these Spartans right here, these are humans in the market. This is Momo, right? They're emotional, they get hungry, and they get oh so greedy. But this gear right here, this gear is what is powering this wall that the Spartans are pushing against. And this gear is a machine. These are algorithmic market makers, dealers, etc. It's a machine, and a machine doesn't really get tired. So no matter how hard the Spartans push, right, if they're pushing with a little bit of their strength, with a lot of their strength, or even with all of their strength, most of the time, this gear can take it. Maybe this wall moves back a little bit more. For example, like, right, the wall moves back a little bit, the wall moves this way, but generally this gear can handle it because it is a machine. And of course, this is a simplification of the underlying mechanics. Just roll with it, okay? Now, there are times when Spartans win and they push so hard against this wall that they just break the gear. The gear is broken and you get something like GME or other squeeze type situations where Momo pushed so hard that the machine broke and price goes like crazy. But most days, Spartans push, and eventually they lose because they're fighting against the machine. And with Big Short, you can actually figure out when these Spartans are losing. Now, it's not because we know this number right here. So this number is basically how much the Spartans have to push to break the machine, to break the market makers. We don't know that number. No one knows that number. So this number is always going to be a big question mark. But we do have 2 things, right? We know the price, which is basically how far Momo pushed these machines, right? We do have the regular price candles that we can take a look at, and pretty much every platform out there has it. Your broker has it, right? But Big Short does have one number that other platforms don't have, and that is going to be MomoFlow. And you can think of this almost as the Spartans, like a little energy bar or their health meter, if you will. And as the Spartans push more and more against this wall, their energy meter gets depleted, right? As we get more and more of these Momo bars, their energy level goes down. And eventually, because Spartans are human, they're emotional, they're greedy, if they see that things aren't moving in their direction, maybe they will capitulate, or they just run out of money and emotional energy, right? Eventually, they do hit this kind of 0 point or even a negative point. Let's just say almost 0 point, right? They lose a lot of their energy that they've expanded. And if you're just looking at price, you have no idea how much energy was expanded to move that price because you don't have what we have. You don't have these MomoFlow bars. And that is the whole idea behind Momo Exhaustion. Basically, it's the Spartans running out of energy, which can happen in two somewhat different ways, which I'm going to go over here. But before I do, I just want to clarify, this is not volume, right? Everyone has volume, but volume doesn't tell you when the Spartans are running out of energy. So let's take a look at the two ways that this whole Momo exhaustion thing can happen. The first version is kind of the slower version of the exhaustion, or more of a buildup, if you will. Right here, we're looking at Reddit on 731, but this happens both on SPY and non-SPY tickers. You got to understand the concept and you can apply it everywhere. So what do we see here? We see here that Momo has been selling for quite a while. And as they've been selling, we got a lot of these downward price bars, right? So Momo, the Spartans, they're pushing against the wall, and the wall is moving backwards, or in this case, the wall is moving downwards. But if you look at the percentiles, this was a large bar, some small bars, we get bars, and then we get a bigger bar and another big bar. That is a lot of energy that Momo had to spend to get the price down to here. And because we know that Momo had to expand all of this energy right here, these are pretty big bars for this ticker, we are waiting for when these bars either get a lot smaller, like very, very tiny bars that you can barely see, or when Momo flips in the other direction. Could be a small Momo bar, could be a larger Momo bar. Either one can work. Now, generally, this trade is more of a scalp. Sometimes it does lead to a full reversal, but generally it's safer to play it as a scalp until you're confident with the platform. So let's see what actually happens here. Right, we get Momo down, we get price going down. So what do we get next? On this last bar, we actually have FastFlow switching from selling with Momo to switching against Momo. And let's think about how Momo might be thinking at this moment, right? If you are in this sticker, right? And if you bought, somewhere around here, you might be hitting your pain point here, or maybe even before, because I believe Reddit also gapped down from the previous day due to earnings, right? So Momo is looking at this like, oh my God, I got to get out of my position. Like, this is too painful. Or they're looking at it, oh my God, Reddit is going all the way down, down, down. Maybe this is a good time to just short sell and ride this baby all the way down to $100. I'm going to be a billionaire. Oh my God, I'm a genius, right? But what happens? So if we look at the next bar here, we actually get Momo going a little bit up, right? We get a little bit reversal and we get a green candle right here. What happens in the next bar? Okay, Momo starts selling a little bit more. We get a red candle. Okay. And then in the next bar, we get a bigger Momo bar in the opposite direction. So we have this green candle here. And then if we look at the next couple of bars here, you can see that Momo actually bought for the next bar. And we had this, just a quick little scalp right here. Now, sometimes this does lead to a complete reversion, but in this case, if we kind of look at it until the end of the day, it only started reverting a little bit more around here, but this is still a nice scalp that you can take. And then the second way the crowd can run out of energy is basically what's called like the blow-off, right? It's when they expand all of their energy, right? Imagine these are kind of blow-off bars on Reddit, which is why I'm showing you this, because these bars are minus 15 million and then these bars are minus 5. So they're about 3 times the size of the previous bars. But in my ideal scenario, this bar, like this last bar, would have been huge, right? It would have dwarfed anything because Momo's like, okay, no, I'm all in. I got to get rid of everything I have. I got to short sell. Let me just make as much money from this as possible, right? And if this was SPY, and we're looking at an exhaustion of reversal on SPY, what I would have loved to see was actually having this bar be a large pink bar, kind of like this one, but right here. Because usually on SPY, that signals a potential reversal. But this is not SPY. This is not an index. So for non-indexes, generally, on an exhaustion candle, it does seem that having SmartFlow go against Momo is actually potentially a better sign of a reversal. So there are different ways of applying these indicators to indexes and non-indexes. And as I've said before, take a look at your specific ticker and take a look at the historical data, because some tickers are more Momo driven, some tickers are driven by other forces. So you want to know what the ticker that you're trading actually behaves like before you actually trade it. But that is where you might hear people say, like, big lime, big pink, because those, especially for SPY, tend to be good reversal indicators as long as Momo is sizable. For example, if we had, a very large pink bar like here, let's say pretend we're looking at SPY, not Reddit, but then Momo was really tiny, that's not necessarily a exhaustion indicator, right? FastFlow is selling a lot, but Momo is not really exhausted. Momo can keep pushing like it did here, and FastFlow can still keep selling a little bit and price would still go down. Now, of course, number one, there are more advanced ways of looking at this, actually looking at how this affects market makers, but that's going to be for another video because it's going to get too complicated. And number two, keep in mind that you do have to look at price action, because a possibility is that you get a very large Momo candle, and some selling FastFlow, then you get another larger Momo candle and some FastFlow, and maybe it's due to news that you're just not aware of or just craziness in the market. And then you get another larger candle and another larger candle, right? Maybe it's something that actually becomes a cascade. So you do have to look at price action and see that, okay, this Momo bar is still pretty large, but price didn't move nearly as much as it did on these bars right here, where Momo was a little bit smaller. And then as Momo actually flipped, we do get a green price bar. So while it's still a possibility, right, that we keep going a little bit further down if we get another Momo exhaustion, it does look like Momo's pretty tired. Their legs are tired. They're emotionally tired. And now Momo pushing this hard isn't really making the price go down nearly as much. And FastFlow is actually moving in the other direction. Now, exhaustion isn't just a Momo concept. You can also apply it to net options flow. So we're going to take a look at this example in a second, but let's pretend that, we have a day where calls are just being bought and bought and bought and bought and bought. And I'm drawing the net options flow chart line here. So basically just a lot of calls here being bought, or just a lot of puts sold, right? Eventually, everyone who wants these calls got these calls. And there's not really any more people who are trying to buy calls. So when this line starts rolling over a little bit, or you get, an outsized put buy spike, or you get an outsized call sold spike, that can actually lead to also another exhaustion where price will go a little bit down if it was calls being bought. So in this case, on this day, what we see is the opposite of that, right? We see puts being bought. We see negative net option flow accumulation throughout the day. Even though it's not large, this still works as a good example. And then right here and right here, we see a lot of puts being sold. Now, puts being sold is not as bullish as calls being bought. And this is a little bit later in the day, but this is a relatively kind of a medium-sized candle, especially for today. For this day, it dwarfs every other candle. And you see that it did eventually lead to this bullish move closer to end of day. And finally, we have the opening range breakout, or just opening range theory. Now, obviously, this is a price action concept, but because BigShort does have opening range indicators right here and also inside of the Toby Crabel section right here, which I'm going to go over in a little bit, this is something that you should be aware of. And especially if you trade SPY, definitely something that you should understand. Specifically, what you want to look at is being able to classify days based on uptrend days, downtrend days, and kind of just range days that are a little bit boring, but also can sometimes work to trade if the range is big enough. So to do that, we look at the opening range. Right here, we have the 1 hour opening range shaded. And all it does is it just takes, this is the 5-minute chart. So it takes the first 12 candles, the top of the first 12 candles, and that's where the top of the opening range is. And it takes the bottom of the first 12 candles, because it's a 5-minute chart and 5 times 12 is 60, which is 1 hour. It takes the bottom of those 12 candles, and that is the opening range. And generally, the reason we do this is because uptrend days are going to be easier to trade than, super volatile range days, or even downtrend days, because downtrend days can be a little bit weird. And an ideal uptrend day, basically a golden trend day, has a couple of factors. So number one, it has a breakout of the 15-minute opening range, as you can see right here. So if I 15, 30, and 1 hour, so it has a breakout of on the 50-minute opening range, it has a rapid breakout on the 30, and generally we want to see a pretty rapid breakout on the hourly as well. Now, the first hour doesn't end until 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The first hour doesn't really end until here, so we almost see a kind of almost a breakout on the 1 hour, but then it does go down a little bit and eventually breaks out right here. So it's not, the most perfect opening range breakout, but it is very, very close, and this is not, a huge grind down. It's not super volatile. And generally, you do want to see kind of a pattern like this where it breaks out pretty quickly, then breaks out on the 1 hour. And also, it's not, a super ugly day where it goes down and then up and then down and then up and eventually breaks out. Those are usually not ideal trend days to trade, even though that can still be counted as an uptrend day. And the reason you want to know if it's an uptrend day is because generally, number one, we hit high of day right around power hour or a little bit before. Generally, to recommend selling, 15 to 45 minutes before power hour, depending on the day. And number two, there's also another potential trade that you can do on an uptrend day, which is a bounce off the 20 SMA or the middle of the Bollinger Band. Now, in this case, it didn't work out perfectly. And I actually wanted to show you this because there are two different ways that an uptrend day can approach this 20 SMA line. You can go kind of almost horizontal at it, which is not the most ideal setup, or it can go a little bit more aggressively diagonal like this, or like this, or like this. And the more kind of diagonal it is, but unless it's a completely vertical line, generally the more likely the actual bounce is. So on this day, we don't get a perfect bounce off the 20 SMA. We actually go a little bit below it, and then eventually we do break upwards from there. But on uptrend days, especially if we do get kind of a more, if this, for example, continued like this would have been a more likely bounce upwards, just based on previous price action. Now, one thing to keep in mind is that downtrend days aren't a perfect reverse image of an uptrend day. Let me make this bigger so I can show you. So on an uptrend day, this is a pretty clear uptrend day. We don't really go down. It's pretty clear. It's very nice. Now, a downtrend day, even if it clearly breaks down on the 15, breaks down on the 30, maybe it goes up a little bit, breaks down on the 1 hour, it still is not as easy to trade generally than an uptrend day, because a downtrend day often has kind of it has a strong push, has a little bit of a let up, then a strong push, and sometimes it can actually come back and kind of do something like this. So it's not always as easy to trade as an uptrend day. And of course, you can also use the Toby Crabel and Zarattini indicators, which we have a full video on each of those on the channel if you are interested. I'm going to go over these in pretty much the next section, actually. So let's just jump right into that. Now, this is all about improving your stock selection and finding opportunities to trade. And there are two ways of doing that. Number one is if you're not trading mostly SPY, you probably already do this, right? It's the proactive way. You have your own little watch list. You have maybe potential scanners set up for, Qual McGee breakouts, VCPs, undercuts and reclaims, all that fun stuff, right? You have your own scanners that help you find and filter potential setups for yourself. And that is great. You should be doing that. And if you're not, and you're a swing trader, I don't know what you're doing. And where BigShort can help you with that is actually fine-tuning some of your entry. And you can filter these in multiple ways using BigShort. You'll find your own preferred way eventually, but this one is Toby Crabel. So this is a Toby Crabel opening range breakout strategy, and it tells you these things about different stocks. Basically, it tells you when stocks have compression. ID means inside day, NR4 means narrow range 4, and NR7 means narrow range 7, which basically means that the day the indicator fired, number one, was an inside day. It was all the way inside the previous day's range. Number two, it is the narrowest out of the 4 previous days, including that day, or it's the narrowest of the previous 7 days, including that day. And then obviously ID plus NR4, ID plus NR7 combines those filters. So number one, if you have a ticker you're looking to trade and you see that it's already on the Toby Crabel filter, and you can literally just type it in here. So for example, I think I saw SpaceX, I think that was NR4. Cool, SpaceX is an NR4. That's interesting confirmation. Maybe I'm going to look for a Toby Crabel style breakout on SpaceX. Another way to do that is to just look at those stocks on the actual chart, right? I already showed you how you can use the 1 hour and the 1 day chart. So for example, you might open the 1 hour chart and take a look at Netflix to see what it looks like. And you might see that there was some really, really good net options flow. It's not too interesting. We do have this really, really big put sale right here, which did lead to an eventual bit of a bullish move. But if you're looking at it today, right, there's some double puts, put sales, a little bit of a put sale right here, but nothing too huge. And then the third way you can do that is actually using the dashboard and the short exempt list. So on this dashboard right here, this is updated live throughout the day. So I'm going to go over how you can use that reactively. But for example, these stocks right here had the biggest positive net options flow on that day. These had the biggest negative net options flow. So if you see one of your stocks you're considering to trade on this list, usually that tends to be a good sign for a potential breakout. And the final thing I want to draw your attention is the short exempt. If you see your stock on the short exempt list, and by the way, you can adjust what's shown here by clicking on the gear and finding what you want to look at. Everyone has different things they look at, and I don't want to get way too deep into the weeds here because there are a lot of things you can basically look at. But I like to have short exempt here and short exempt for 10-day, because if a stock is short exempt, for some stocks, it does tend to lead to a potential kind of a breakout or a bounce after they were on the short exempt list. And I want to actually show you something. I am inside of the short volume section, and you can find the short exempt stocks right here. And of course, if you click on it in the dashboard, it will also take you here. And this right here is the short exempt value. And if you remember Carvana, there was a time period where people thought that Carvana was just going to go bankrupt. Hindenburg wrote about it, saying they had a massive short position. And as you can see, during this period, when it was really, really at the lows, there was massive short exempt, which eventually led to this really, really ginormous move. Now, generally, you're not looking at short exempt on these really, really long time periods. This is just a kind of an exaggerated example. A more realistic example is something like UNH. So this is actually a trade that Tay took and someone called out for him in the Discord. But if you, let me zoom in here so you can actually see a little bit better. So on this day, this was just ginormous short exempt for UNH, and someone in our Discord called it out. And what they did is you basically, this short exempt list is released at the end of every day. So you take the trade on the next day if, you know, big short indicators align and your other technical indicators or whatever you use aligns. And what happened is after the short exempt day, this was this big rally. They entered on this somewhere around here on that day. And then this was a huge, huge trade for Tay. I think he exited somewhere around here. But this is just one example of using short exempt. Once you see a really large short exempt spike, generally that tends to lead to a breakout. Now that's not always the case, so don't just sell puts on every single thing you see on the short exempt list. You still have to do a little bit of your own trading, a little bit of your own thinking, because sometimes if the stock is, you know, gapping down massively and massively and more massively for some fundamental reason, there is that possibility that it's going to just keep going down and you're going to get, you know, quite a bit of short exempt here. And then finally, for actually reactive stock selection, which is something basically, if you run out of your own stocks throughout the day and you're just looking at like, what do I trade today, right? Well, two options. Number one is the Zarattini indicator in the Toby Crabel section. The Zarattini indicator has its own video on this YouTube channel, so I'm not going to go too deep into it. But basically, this is an indicator that got, I think, 1,637% returns in a period of 5 years based on their backtest. And based on my personal backtest, it's also pretty effective. And what it looks at is it looks at stocks that have very, very high relative volume in that first 5 minutes of the day. Basically, a quick way of finding a stock in play. And Zarattini has his own way of trading it. So for example, let's take a look at one that actually had an orb. I don't know if we actually looked at Roblox already, so let's take a look at Roblox here. So the way you trade Zarattini is simple. Once you have a stock that has high relative volume, you look for it to break down or break up in the direction of the first candle. So here the first candle is downwards. So we're looking at the break of this opening range right here to the downside, obviously, because this is a red candle. So once it breaks right here, you enter and you kind of just, you can either ride it to where you see big short indicators signaling that maybe it is time to exit, or you just ride it to end of day. That's what they use in the actual Zarattini study. With a stop, they use a stop at about 10% ATR. I have no idea what 10% ATR is for Roblox, so maybe here or here. I'm not sure. You can also experiment with different stops and experiment with using big short indicators to actually trade that, but that is how you would trade Zarattini. And finally, if you're using kind of reactive stock selection, I do like to have this dashboard open during the day, and it looks like this dashboard is now focusing on today. So it just got updated. We got all of this data removed. But one thing you can look at is, of course, obviously all of these changing throughout the day. You can look at top positive NOF, top positive NOF that's Martian, or you can focus on just individual 5-minute bars and open up, for example, where would that live? The top 10 NOF on the 5-minute, the bottom 10 NOF on the 5-minute, if you want to find some sort of, you know, quick trade or some really outsized net options flow for that specific ticker. Or you can also look at, where is it? Top 10 largest lime or top 10 largest pink, which I went over in that exhaustion setup. And finally, this is a big question we get, improving your entries and exits. Now, I give you a couple of setups. I gave you a way to look at these indicators. And in the next video, I'm going to give you some of these additional indicators and GEX and charm by strike, sex, and other things to look at. Now, generally, there is no hard and fast rule because it does depend on a lot of things. It depends on your risk tolerance. It depends on what ticker you're trading. It depends on your personal trading style. It depends on how you're sizing. I've noticed a lot of people tend to oversize, especially if they have small accounts. So then if it goes against them just a little bit, they're like, no, I'm out, I'm scared. And then, you know, they get shaken out because they're now a part of Momo. And then the price moves in the direction that they were looking at, and they're kicking themselves because like, I knew I was going to do that. Why did I stay in? Well, you couldn't stay in because emotionally that amount of size is really hard for you to handle. So recommendation there is to downsize. And I do wish that I had, you know, this super easy way, like, hey, just enter here, you know, enter here on a 1.5 R trade and then exit, you know, right around here and you get 1.5 R, whatever it is, right? I wish I had that. I do not. But what I do have is my approach, and my approach is as follows. Generally, especially when I started out, I tried to undersize. So if, for example, you trade 10 contracts, I would trade 1 or 2. And then if you get price confirmation, so for example, let's say you enter right here, you get confirmation, you're only 1 or 2 contracts in, you can add a couple more contracts here or on the next green candle. And then you're still undersized, so you're comfortable with it. You already got some confirmation, you already got some profits, and you can feel fine because it's going to take you some time to figure out these indicators. And what BigShort allows you to do is to actually look at flow. So just as an example, let's say that on this chart, you did decide to enter on this candle because you saw, okay, Momo was down, FastFlow was down, but price did go down, but then it still closed positive. So Momo and FastFlow, they were not strong enough to push the price way down. So could be bullish. Plus we have the MVC here. So maybe we go up, right? Maybe you have that inkling. So you enter here, and what you look for is the flow or the indicators of BigShort to go against you. So for example, if your entry criteria was, okay, Momo is selling, and Momo buying seemed to be bearish, so now Momo selling is probably going to be bullish. So you go until you see a candle where Momo is buying, or until price action obviously goes against you. So you could go until this candle here, and then you could either potentially exit on there, you could see what price action does, or what I personally generally do is I like to take partials and then let runners run. I think I stole it from Mark Minervini. Maybe I stole it from Bill O'Neill. I'm not sure. But basically the way I approach is I sell 50% if the flow goes against me or I get some other indicators. So for example, if right here we had a giant purple put spike, I would probably exit. Or right here, we had a giant put spike. I'll probably exit my entire position. If I don't see anything super obvious, I might exit half if I feel like that's already a pretty good move and we're probably not gonna move in the other direction. But I will leave the other half in case it is a massive runner. So then I take profit, I have some profit, I'm feeling happy, woohoo, money. But then I still leave a runner to potentially catch those massive moves and I don't feel that fear of missing out. That's what works best for my personal psychology. Obviously, everyone has different psychology, different sizing, different entries. And then of course, if you're trading like 0 DTEs and you end up entering, let's say you enter somewhere around, somewhere around here and then price kind of grinds here and then it goes down, or you enter somewhere in, I don't know, this grindy area. Well, I don't know why we trade 0 DTE right here. That's close to end of day. Theta decay will eat you alive. But if you do that and you're sizing too much for yourself, which I don't know what that is, you're fighting against theta, right? And you're fighting against really significant percentage changes if price goes against you. So it's easier to get shaken out versus if you're trading, 1 DTEs, weeklies, or maybe even if you're trading futures. Now, I know this is a long video, and if you stuck around to watch all of this, I mean, congratulations, you're doing already a lot more than most other traders, and you understand a lot more about how the market works than other retail traders. So you can take what I gave you here and start experimenting, start paper trading, start playing some chart game, which chart game, depending on when you watch this, will have BigShort indicators inside of it, so you can actually experiment. And then again, do what we did, look at historical data, see how price reacts to these indicators. And there's also another video coming to you next after this video where I go deeper into gamma, I go deeper into charm, and some other fun but more advanced indicators like manipulation. And also one very important concept of time and churn, which can help you with figuring out, okay, well, when do these BigShort indicators work? Like, why didn't it work immediately? Why did it take some time to work? And also a concept of the interaction between price and these indicators, which should be very helpful in your trading. But this video is getting too long, so I'm going to end this here. Thank you for watching, and I'll see you in the next video.